Welcome to the FX Options Weekly Outlook, a weekly podcast series hosted by Jason Ayres, a top instructor, trader, and founder of OptionSource.net. Join Jason as he discusses the latest trends in the Forex market with a look ahead on the US dollar versus the major currencies using the most commonly used technical indicators.
Hi there and welcome to the ISC FX Options Outlook for June 8th, 2010. As always, this is Jason Ayres of OptionSource.net. Let's take a look at a weekly chart of the US dollar index. This is a great way to gain perspective as to how the US dollar is performing against a basket of currencies. Well, the trend remains strong to the upside for the US dollar against many of the majors. The 88.90 box remains a key resistance level, and although we have not yet hit 90 at this point, we have to be cautious of a possible pullback. 84.85 remains strong support, and the index could pull back to these levels and still respect the uptrend that has been in place. A look at a daily snapshot shows a near-term support at 87, 87.5, and an upside target of 89.90. However, understand that an event-driven catalyst in the euro could conceivably push this dollar index beyond our 90 level. Next up, the CDD, the US versus the Canadian dollar. Well, the CDD pulled back to the 104, 105 support level and held. It appears that the pair is forming a bullish wedge. 107, 108 remains the strong upside resistance. 110, 112 remains an upside target. Now the YUK, the US versus the Japanese yen, tested 93 and rejected, suggesting for us to expect continued weakness in the US dollar against the yen. A continuation lower is likely to test this 87-88 level. Next up, the EUI. The US versus the euro. Now the EUI hit the 83-84 target that we had in our sights over the last couple of weeks, and at this point we have to be cautious of a pullback. Now an extended move higher brings this 87-88 box into the picture as an upside target. The BPX found support at 67.5, 68, forming what appears to be a bullish flag. Now 69.5, 70 is a key overhead resistance, a break of which will have us targeting this 73-74 box. The AUX, the US versus the Australian dollar, hit a resistance level at 122, 123, but the trend remains strong to the upside. We do have a near-term target at 126, 128. However, we could see a pullback down to this 117, 118 level and still respect the uptrend that has been in force for quite some time. Let's take a look at a few of our key points. First of all, the US dollar index found its way into our 88.90 box, and while the index is yet to hit 90, we have to be suspect of a possible retracement lower. In the bigger picture, the trend remains up. The CDD bounced at our 104, 105 focal zone and is likely to retest 107, 108. This remains a very strong resistance level. We may be seeing a bullish wedge forming, suggesting a push higher towards the 110, 112 box. The YUK trend still appears to be down. 87, 88 would be a logical near-term target. The EUI hit our 83, 84 target. We have to be cautious of a possible pullback here. The trend still remains to the upside for the US dollar against the euro, with the next logical target being 87, 88. The BPX appears to be forming a bull flag after finding support at 67.5, 68. A break above 70 opens the window for a push towards 74. The AUX tests a resistance level at 122, 123. We should be cautious of a possible pullback at this level. A break above 123 suggests 126, 128 as a target for an extended move higher. And this has been your ISC FX Options Weekly Outlook for June 8th, 2010. As always, this is Jason Ayres of OptionSource.net. Thanks for joining me here this week. We'll see you here next week.
Thank you for participating in this week's session. Please join us again next week. For trading ideas, exchange rates, webinars, news, and commentary, visit www.fxoptions.com. Become an OptionSource.net member. Visit www.optionsource.net. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in US dollars and have a European-style exercise.